Hello everyone and welcome back. On this edition of the Forex Market Preview, we're going to talk about the EURUSD, which just broke out of the flag pattern. We're also going to talk about the pound, which just made new structure highs. We're going to talk about Euro New Zealand and the Gartley pattern that we're still waiting on. We're going to take a look at that again, as well as New Zealand Japanese yen, and I'm going to give you my thoughts on that. I think it could go either way, and it's going to be up to you to make that decision. All that and much more on today's edition of the Forex Market Preview. You know, it's kind of funny because there are different theories about markets that people have about whether markets are efficient or whether they're inefficient, and whether the market is always right. We hear this conversation all the time. The market is always right, and I approach the market much differently. I approach it from a standpoint of the market is always wrong. That the current price is never the correct price, and in fact, there is no correct price. And so, while there may be periods where the market is at rest, when the weekend comes, like we're looking at here, and prices settle on a specific point, there is really no perfect price. There is no correct price, and the market forces are always working back and forth between buyers and sellers to try and find what the value of something truly is, but it will never get there. And when you understand that about the markets and you approach the markets from the standpoint of, hey, things are always wrong, things are always in flux, they're always in equilibrium, you can start to give yourself, create for yourself some variable situations. Now, this is called, we call it IPDE here, but it's basically OODA loop theory, which was developed by John Boyd, who was an Air Force pilot in the 1950s and 60s. Now, I'm going to talk more about OODA loop theory on Tuesday at the Into the Gray seminar that I'm holding online. If you guys haven't registered for that, you need to do it right now. We've got over 3,000 people who are registered to be there. And also, for those of you who were wondering, I sent out an email to my people today, and you may or this week, but you may or may not have gotten it. I was not going to record that, but I've gotten so many emails. I mean, literally, probably 100 emails from people who have written in and said, hey, listen, I really want to be there, but I really can't be there, and I really hope that you will record it. That I have decided that I am going to release those recordings, but they're only going out to people who actually registered to attend the event. So if you want that recording of the event and you know you can't make it, well, then go ahead and sign up and make sure that you do that. And I'll put a link underneath this video for you guys to be able to do that. But when we talk about staying inside the market's OODA loop, one of the things is that the market is going to give us signals as to what it wants to do and what it intends to do. It doesn't always fulfill that obligation to us. That's why we're not right 100% of the time. We don't find that one system or that one setup that just produces 100 out of 100 times. Every time this happens, it produces a profit. I've never found a situation like that, and of the ones that we've found that really produce very, very high outcomes in the 90 to 95% range, they occur so infrequently that they're not really tradable. So you might have a situation that occurs, when it occurs, you have a 90 to 95% accuracy, but it only occurs, once every 2 years or once every 3 years. And those types of things are not really effective for us in terms of trading and trying to make a living from a cash flow basis. So, but today what I want to talk about is we're just going to break into the technicals here, and I'm going to show you a little bit of what. So I got notes today. I like to, normally I keep them down, but I ask myself, why am I doing that? These guys don't care whether I look at notes or not. So today we're going to talk about the Euro USD. Let's just jump right in here and go right to it. We'll start with the Euro USD, and I'm going to take a look at the flag pattern that exists. Now, this is, you could go either way with this on a flag pattern. A flag pattern is defined by, a strong, nearly vertical upward move, which would be this, followed by essentially a channel. So if I grab my little channel lines here and I just do something like this and I drag this down, you're going to see that we get a nice little channel as the market channels downward. But we've broken out of that, and we happen to have broken out of it right into a resistance level. So this is a situation where 9 times out of these guys, it's not 9 times out of 10, but I think it's something like 85% 85 or 86% of the time, these break out to the upside. Get a long upward movement, get a flag formation, what looks like a flag, a downward channel, the markets tend to break out to the upside. Now, it's broken into this resistance area, so there's a couple of different ways that you can play this. You can just go ahead and you can buy right here, looking for the market to advance back up into resistance around 138s. You can wait for a retracement, which is what I will likely do, and look for buying opportunities around previous structure resistance on the lower time frame. As you guys know, I don't do a lot of trading on the daily charts. I don't. It's a rare occurrence when I'll find a risk reward on a daily chart that that will work for me. So I tend to keep it down on lower time frames, 4 hour, 60 minute, that type of thing. So if this market will press back down into previous structure support or resistance, which should be support around 36.47s, then we've got a potential for a press up. And then all we do is look left for structure. There's your previous structure level. Stops will have to go below that. So you've got a really decent risk to reward ratio here on this trade. Okay. And then follow on targets if the market actually does break out above that. So this is a nice little opportunity. Let's break over to the pound. If you guys will remember from a couple of weeks ago, we saw this head fake in the pound. I called the market short. The market did roll over back down into previous structure support, which held. That support level holds. And then the market just went on a straight vertical move due north. Now we're running into overbought territory here around 80.07. And what I'm going to be watching for is a pullback down into previous structure resistance at 66.34s. If and only if the market will come back down into that level will I look to get long. But clearly here the market is signaling that it wants to go higher. It tried right here. It tried to break out right here and it was beaten back. Came back down into support. We got some big runners on. I don't know if there were some news events that came out here, and the market blew right through that previous structure resistance level. And now we're going to look for a pullback back down into that in order to kind of give ourselves a little bit of buying opportunity. Now, the stops are going to be wide on this unless we can find something on the lower time frames. So what you may want to do here is do what I do, which is to drop down to the 4-hour chart, go to the 240-minute chart, and then as that market pulls back down into there, wait for a double bottom. Wait for a break above after the market puts in a double bottom, giving you some indication that yes, it intends to stop here. Because guys, even though the resistance level is here, there's nothing saying the market couldn't pull all the way back down here to 6400s or 6300s or even 63s basically, 6300s. And the last thing that you want to be doing is buying at 66.50 and then watching the market collapse to 6,300, only to turn around and rally on up to new structure highs. So it's important to be patient. What I tell traders is, traders who come through my programs, what I tell them is wait until the money is laying on the ground begging to be picked up. So wait until you've got the perfect scenario. You have multiple currencies. It's not like you're trading Apple and Google. It's not like you're trading crude oil and that's all you trade. You literally have probably 20 decent pairs that you can look at on varying time frames. There is going to be opportunity somewhere. There is no reason to try and force a trade ever. What you want to do is you want to have a set of rules and conditions that you follow every single time, and then you want to make sure that you only trade when the money is laying on the floor waiting to be picked up. So that's what we're going to do here on this pound trade. Now, I'm doing something a little different this time to help kind of pay for everything that we're doing here. I'm going to run a little sponsor ad. I normally run them at the beginning, but I'm just going to run a mid-roll ad, and then when we come back, I'm going to talk about the two trades that we've actually got going on for this week, which is Euro New Zealand and the Gartley pattern, and also New Zealand Yen, which I'm going to spend some time on showing you the two different scenario play out, two different ways that I think this market could play out. So we'll be back in just a minute. All right, and we're back. Let's go ahead and grab the chart here. Let's go to Euro New Zealand, and let's just take a look at this Gartley pattern that is setting up. I need to go back out to the daily chart so we don't have so much junk on our charts. And as you can see here, a very, very nice pattern. The market's moving back down into this structure support level at around 63.51s. And what I'm looking for is that market to get through that support level and come back down into around 160. At 160, I'm looking to be a buyer on this thing because I do have a risk reward on this particular trade that will be very nice. This comes down deep enough into this area that I can get stops right underneath these lows. I can also pick this up on the 4-hour chart. So this is absolutely a trade that I am going to be watching into next week. And this is one syndicate members. I don't normally, for syndicate members, don't normally put high time frame stuff on there. It's usually a swing trading time frame of about 60 minutes or so, giving you guys a chance to let trades play out throughout the week. But at 160s, it's a nice even handle number, and it's going to be a very, very nice place to look for that long position. So let's bump over now to New Zealand yen, and we're going to talk a little bit about this. Now, this market has made a very significant pullback. We actually made a pullback beyond the previous structure resistance level here. And now the market has rallied up, and if you look, we've run into a resistance level around here. Now, you can't really see much about what this market is doing or what the plan is here on the daily chart. In order to get a kind of a better picture, you really have to drop down to the 4-hour chart. And as we drop down to the 4-hour chart, and I'm going to adjust here a little bit, I'm just going to delete this one because we don't need that. If I adjust this just a hair, what you're going to see is, look at this. Previous structure support, support gets violated, previous structure support becomes resistance, market rolls over. And actually, this is not a bad... Let me just run through it. We're going to run through this on Tuesday, okay? But I'm just going to give you guys a quick little look at this. Market presses down. We rally back up into previous structure support, which ends up being resistance. We break lower. We get a break below, close below the previous structure low. Then the market rallies back up. Where do we rally back up to? Look left. Structure leaves clues. Previous structure support becomes resistance. Then the market breaks down. Then we rally back up. Where do we rally back up to? Well, we almost got back up into support, but missed it by just a hair, and then the market rolls over. Then we go the other direction. Up we go. Boom. New structure highs. We break the previous high here, looking left. Then we pull back. Where do we pull back to? Look left. Structure leaves clues. Boom. Then we rally again, breaking into new structure highs above the previous high. Then we pull back. Where do we pull back to? Look left. Structure leaves clues. Then we rally again. Boom. On up again, breaking into new structure highs. Then the market pulls back. Say it. Where does the market pull back to? Look left, structure leaves clues. And one more time. Ba-bump, ba-bump. We pull back. Where do we pull back to? Look left, structure leaves clues. Now, this is the important thing, and this is what we're going to be learning on Tuesday, what I'm going to be teaching you. I'm going to teach you two different methodologies, one of which is how to take advantage of this. We can see it on the chart. It's plain as day. Look left, structure leaves clues. The market's giving you perfect buying and selling opportunities inside of these moves. The question is, do you know how to take advantage of them? And we're going to be talking about that on Tuesday. But this is a great example of how structure plays such a critical role in our understanding of what's happening in the market. Now what's happened is the market has pulled back. We've rallied. We have not reached new structure highs. And then the market has come back down in to retest the support level, and now we're trading sideways into the end of the day on Friday. Now this market is closed. I don't know where it's going to open. I don't know what's going to happen here, but there is a selling opportunity. You can sell right here at 85.16s. Look left for the structure point here. This one is a little too tight. You're going to need a little bit more room than that. You're going to have to go up here to 85.82s. Get stops above 85.82s, maybe 86.01s or something like that, 86.02s. And then you're going to look for some targets after the break of structure. Okay, beyond the break of structure, perhaps down here around 84.32s. You can pick any one of these levels. You might choose this level because it was such a nice structure support and resistance level. You may choose 8400s, a nice even round number, looking for that market to press lower. What could also happen here is this market could just rally onto new structure highs, because as you'll see, as we put in this support level, we have not violated the previous lows. And until this market breaks down and violates these lows, we technically have not had a shift in trend direction. And that's going to be really, really important. We look for those shifts in trends. So you can be aggressive. You can take the trade now. I talked about where the stops and the targets could potentially go. You can also wait for the market to actually prove and confirm that it wants to shift directions. Neither one is right or wrong. It's just one of them is a shift. One of them is more aggressive than the other ones. But I wanted to throw this out to you because not only is it a great show of structure and a great show of how markets move, but it also gives you a couple of different options on how you can take advantage of a trade like that, both on a trend reversal situation. So that is going to do it. If you haven't registered for the live event, please do it. Please like this video. Please share this video. I want to continue to grow this audience. You guys have been phenomenal. 15,000 of you, almost 16,000 now. We're growing at a rate of 2,500 people a month are coming in and learning about trading, increasing their skills on technical analysis, and me getting a chance to speak with you guys and share my kind of unique viewpoint on the markets with you. So I really appreciate that, and I appreciate all the comments and the stuff that you leave me. So do that for me, and I'll see you guys next week.